Hello warriors, I hope you're all doing great. This is your friend Rahul Agrawal and I'm here before you to discuss something important for all my CMA Inter and CA Inter students. As you all know, we just now had our CMA Inter December 2025 results kicking in and a lot of people have cleared their examinations. Amazing the results this time. So many exemptions have dropped into my inbox and I'm so happy and so proud about each and every one of you. But for all those people who unfortunately did not get through, yes, your June 2026 is around the corner and therefore this video will probably help you prepare for your direct taxation paper because as you all know, between December to June, there are amendments that you have to keep in mind. Now, this video will once again also be posted after the CA Inter results come out for Jan 2026 because you will also have the same amendments applicable for you as well. Yes, so if you are going to be any of those students, yes, please stay back on this video. This video is going to help you prepare for your May 2026 examinations without having the burden to read the whole subject once again. There are amendments, no doubts about it. There are changes, no doubts about it. But do you have to pay too much attention to it, or is it something you can easily manage on your own? Is what this video is going to come and tell you. So let's watch it out together and let's understand how it is. I will explain you each and every amendment as highlighted in greens in the material. This material will also be available to you in the description box so that you can download it from there and refer it along with your old material. If you think the old material is going to be confusing, please proceed forward to buy a new material. I generally prefer the second option because it helps you prepare for the assessment year changes. The existing materials which you will have, not just mine, any faculties for that matter, would have given you data based on earlier assessment year data, and that can become a little confusing when you're preparing for examinations. So that small changes may not be very fruitful for you preparing on the last year of examinations. Generally is recommended to shift your material and get a new one because it always helps you. I am not telling you buy my material. If you've used my material in the past, then yes, probably that will be more sensible for you. But if you're using it any faculty's material, my strong suggestion is go back and buy that faculty's material and make sure that you're prepared accordingly. According to that, the amendments will also kick in and you will be able to understand that. Now, in this video, we'll explain each and every amendment in detail. I'll also give you some illustrations and examples so that you can prepare for your amendments properly and understand each and every topic in the right sense. Shall we? Chalo, let's keep this video short and sweet, people, so that you are all aware about what is happening, but at the same time preparing for other examinations as well in the full swing of. Chalo, first ones, I am coming and clarifying to you what are the basic changes to be kept in mind. Firstly, people, as you're aware, since you're moving from December 25 or Jan 2026 examinations, your assessment year automatically changes. You have a new Finance Act which applies to you, which is Finance Act 2025, and therefore all changes will be applicable as per previous year 25-26 and assessment year 26-27, which means all examination questions now will be for April 25 to March 26 and assessment year 26-27. So please bear in mind about the assessment year change. Second, what are the significant changes? The first and the most important change has come into your default tax regime. As you all know, for the last attempt, you would have learned something called 0 to 3 lakhs, 3 to 7 lakhs, and so on and so forth. Income tax has made it extremely simple for you from the current year. From the current year, section 115 BAC simply comes and says that I will tax you in the manner that for every incremental 4 lakh rupees, you'll be taxable for an incremental 5%. In simple words, for the first 4 lakh rupees, you will be not paying any tax. From 4 lakh to 8 lakh, which is an incremental 4 lakh, 5%. From an 8 lakh to 10 lakh, which is 8 lakh to 12 lakh, an incremental of 10%. 12 to 16 is 15%. 16 to 20 is 20%. 20 to 24 is 25%. And everything after 24 is 30%. Very simple. Can you repeat it after me, people? What is it? 0 to 4 lakhs, 0. 4 lakhs to 8 lakhs, 5%, 8 lakh to 12 lakh, 10%, 12 lakh to 16 lakh, 15%, 16 to 20 lakh, 20%, 20 to 24, 25%, and after 24 will become 30%. Once again, yes, go. It's 0 to 4 lakhs, 0, 4 lakh to 8 lakh, 5%, 8 lakh to 12 lakh, 10%, 12 to 16 will be 15%, 16 to 20 will be 20%, 20 to 24 is 25, and then it becomes 30%. Very simple, straightforward. Every 5% increase has a 4 lakh incremental difference. Simple, straightforward. Yes. How does it work, people? If I have to give you a very, very simple example, I'm coming and giving you an example of, let's say I'm having 30 lakh rupees. What am I going to do? For the 30 lakh rupees, for the first 4 lakhs, I'm going to say nil. For the next 4 lakhs, I'm going to say 5%, which on your calculator should show you 20,000 rupees. Check kar lo. Next is another 4 lakhs, which will give you an incremental 10%, which means 40,000. Another 4 lakhs will give you 60,000. Another 4 lakhs will give you 80,000. Another 4 lakhs will give you 1 lakh. I think we have already crossed 24. Check karo. 4, 8, 12, 16, 20 and 24. This gives me the balance of 6 lakh rupees at the rate of 30%. Answer hits to be 1,80,000. Answer it's to be 1,80,000. Now shortcuts, as we have discussed last batch also, people, is that if you check for the first 24 lakhs, the answer will come to 3 lakh rupees. If you total this number, you will see the answer is coming to 3 lakh rupees, which means it's simple. 1,80,000 rupees plus another 3 lakh rupees will give me 4,80,000 rupees as my tax liability under my new tax regime. Yes, add on that cess and you can get your final answers. I don't have a calculator, so I'm not wasting time on this, people, but you should be able to get the right answer from here. Chalo. Yes, perfect. This is what the answer is. Any doubts on this, my friends? Clear? Good. Now, second and the most important amendment is coming in your rebate conditions. For those who know, people, for the default tax regime, we were eligible for rebate up to 7 lakh rupees. This number now jumps to 12 lakhs. So read the lines very carefully. It says when you want to claim rebate under new tax regime, you can now claim a rebate up to 12 lakh rupees. Up to 12 lakh rupees. So let's check on the top. If you notice, for 0 to 4 lakhs it was 0, for 4 lakh to 8 lakh it was 5, which was 20,000 rupees, and up to 12 lakhs it was 40,000 rupees, which means I was eligible for a quantum of 60,000, and that is what my rebate is. That is what my rebate is. Matlab, income tax says if you want to claim rebate for a total income of 12 lakh rupees, you'll be eligible for a rebate of 60,000 rupees or actual tax payable, whichever is lower. Once again, it is 12 lakh rupees with a rebate of 60,000 rupees. But the challenge is not there. The challenges come on the right side. The most important amendment that you will definitely get tested in examination, people, is that from the current year, for the new tax regime, you cannot claim rebate on any special incomes. Until last year, you could have claimed rebate on every special income except for 112A. But this year comes and says you cannot claim rebate on any special incomes. Very, very important for you to keep in mind. Rahul, is this change there for old tax regime also? No. Understand, old tax regime remains the same. It is only for the new tax regime. So if I have to summarize this for you, people, it will work like this. Imagine if I'm in old tax regime or I'm in new tax regime. In old tax regime, what was the rebate condition? The rebate condition said your total income should be up to 5 lakh rupees and you'll get a rebate of 12,500. You remember this? Yes, chalo. On the right side, now the amendment comes and says that you have to have a total income of up to 12 lakh rupees and you will get a rebate of about 60,000 rupees. Till here it is fine. But the problem came in the default conditions. The conditions itself now come and say this 12,500 rupees you could have claimed on any income except for 112A. Whereas when it comes to new tax regime comes and says you can claim this on only slab incomes, which means any special income will not be liable for default tax regime rebate. You can only claim it on slab incomes. Very, very important for you to keep this in mind. Yes, yes. Now, how does this work, Rahul? Can you explain this with an example? Let me do that. Very simple example. I'm giving it before you, people. Let's see if you're able to understand this with me. Example says, if you're going to have a tax liability for Mr. Garib, there is a person called Mr. Garib who is expecting his tax liability. The following information is given to you. Information says, my old tax regime, PGBP is 2,70,000, 111A is 20, 112 is 30, 112A is 1,60,000. Whereas new tax regime, it is 4,20,000, 20, 30, 1,60,000. First of all, always check if you're poor or not, if you're eligible for rebate or not. So let's do a total on the right side. What is happening, people? 2,90,000, 3,20,000, 3,80,000, 4,80,000 is my total income. Correct? Yes. On the right side, it is 4,40,000, 4,70,000, 5,30,000 and 6,30,000. So 6,30,000 has been confirmed as my incomes. Now with this, I can confirm to you, left side is less than 5 lakhs, right side is less than 12 lakhs. I am eligible for rebate. At this stage, let's first compute the tax liability. Help karo. What is happening? My PGBP is a slab income. My 111A, as per the new conditions, is going to be taxable at 20%. 112 is going to be taxable at 12.5%, and 112A is going to be taxable at 12.5, exceeding the 1,25,000. A correct? We discussed about it. Yes, chalo. One by one, people. When it comes to your PGBP income, what is going to happen? For 2,70,000 old tax regime, I will ignore 2,50,000, 20,000 pay 5%. So 20,000 pay 5% came to me as 1,000 rupees. People don't trust the book, try it on your calculator. You are attempting examinations, you should be able to try it on your calculator, so give it a shot, give it a shot. Yes, so PGBP has come to 1000 rupees because 2,50,000 tak no tax, 20,000 pay 5%. Next, 20,000 pay 20%. What is the number going to hit? 20,000 pay 20% is going to hit 4,000 rupees. Correct? Yes. Next, 30,000 pay 12.5% is going to hit 3,750. Check on the calculator, people. 3,750 is what you should get. Final one, if you have 1,60,000 pay, what will you do? Again, another 12.5%. So you took 12.5%, but after ignoring the 1,25,000. So for the first 1,25,000, you said no tax, and then you said 12.5%, which means answer should hit 4,375. 4,375. Check kar lo, people. Yes, so PGBP has come to 1000, your 111A has come to 4,000, 112 is 3,750 and 112A is 4,375, giving me a tax liability of 13,125. Yes, so my old tax regime tax liability has come to 13,125. At this stage, what will you do? Notice, what did I say? Old tax regime says you can claim rebate on any income except 112A. So let's check which incomes can I claim rebate on. Can I claim rebate on PGBP? Yes. Can I claim rebate on 111A? Yes. Can I claim rebate on 112? Yes. Can I claim rebate on 112A? No. Can't claim rebate on 112A, which means ignoring this, what are the balance incomes? Check the balance income. 4 plus 1 is 5,000. 5,000 plus 3 is 8,750, which means I can only claim rebate of 12,500 or 8,750, whichever is lower. By that logic, I said I can only claim rebate of 8,750, which is why my tax liability is 4,375, which is nothing but the 112A tax. Correct? Yes, with this 4,375, I will add my cess of 4% and my answer tax liability came to 4,550. 4,550, this is what the answer is when you talk to no old tax regime. Let's try my new tax regime, my friends. What is the new tax regime saying? I have to take a tax regime. So it is here 4,20,000. New tax regime rules are what, people? It is for the first 4 lakh no tax. For the balance 20,000, 5%. So for the balance 20,000, when I did 5%, my answer hit 2,000 rupees. Same as previous. Then it came to 4,000 rupees for the same numbers of LTCG, STCG and 112A, giving me a tax liability of 13,125. Now, with my tax liability of 13,125 under new tax regime, I will ask the same question. Which incomes can I claim rebate on? I told you, you can only claim rebate on slab incomes. Yes, matlab, what am I going to do? I'm going to say in this incomes, 1,000 is my PGBP. Can I claim rebate on this? Definitely yes. Can I claim rebate on 111A? No. Can I claim rebate on 112? No. Can I claim rebate on 112A? 100% not, which means now I can only claim a rebate of 1,000 rupees. With my rebate only of 1,000 rupees, my tax liability has now come to 12,125 and therefore my cess included number is 12,610. Yes or no? Yes. By this logic, people, now if you check for old tax regime and new tax regime, I will say despite the fact that new tax regime rates have been better, because of rebate conditions, you may end up in the old tax regime because old tax regime will give you a lower tax liability. Correct? Yes, that is what the new amendment is. So be very, very cautious about this amendment. I do expect this at least as an MCQ question for your examinations. Please expect this as a question. Rebate not being eligible on new tax regime for special incomes is a very, very important condition to be kept in mind. Notice it is still eligible for all the normal incomes. Special income alone is having a problem in new tax regime. Clear? Yes? Chalo. Next, people, is that automatic amendment in marginal rebate. For those who know, marginal rebate comes when you had an income exceeding 7 lakhs. Now, because the income itself has become 12 lakhs, marginal rebate says if your number is going to be little more than 12 lakhs, you will get a marginal rebate. What does marginal rebate look like? See, if my total income is going to be 12,15,000, what will I do? I will compute my tax as per new tax regime. Help karo. For the first 4 lakhs is going to be 0%, therefore nil. Then for the next 4 lakhs, it's going to be 20,000 rupees. For the next 4 lakhs, it's going to be 40,000 rupees. And that leaves me with after 12 lakh, 15,000 at the rate of 15%, which came to 2,250. Giving me a total tax liability of 62,250. Now, if you notice, had my income only been 12 lakh rupees, if my income had only been 12 lakh rupees, I would have claimed full rebate, my tax would have been 0. which means for earning 12,15,000 rupees, you're expecting me to pay tax of 62,250. Does it seem fair? No. Income tax says because in this case for earning an extra 15,000 you're asking me to pay 60 to 250, you might as well surrender the 15,000, which means I will propose that I will only pay tax of 15,000 rupees, but by adding a cess of 600 my tax liability comes to 15,600. Yes or no? This is a concept you've learned for marginal rebate people. You've learned it for your cases of 7 lakh rupees. The answer now changes to 12 lakh rupees. That is the only difference. Which means for an examination, if you want to check for marginal rebate, probably the nearest number you can check for is up to 12 lakh 60,000. Why Rahul 12 lakh 60,000? Because up to 60,000 you can claim rebate. So up to 12 lakh 60,000 you will be ready to surrender your income. So up to 12 lakh 60,000 please ensure that you claim a marginal rebate. And how is marginal rebate? Very simple. Whatever is your extra income, that is the number which you are going to surrender as marginal rebate. So extra income here is 60,000 rupees. So I'll be happy to surrender 60,000 rupees as marginal rebate with the cess. Yes or no? Similarly people, if you notice it was 15,000 here. So I was ready to surrender 15,000 rupees plus cess. If I give you another example where I say 12 lakh 30,000 rupees, you'll simply say surrender 30,000 rupees, add a cess on this. So I'm going to take 30,000 rupees and I'm going to add a cess. Cess is going to be 1,200, which means I'm going to pay tax of 31,200. That is how marginal rebate works. Very simple, straightforward logic. Correct? Yes or no? Chalo, very good. This is your first and the most important amendment. If you know this amendment properly, you're fairly okay with everything else because not much amendments in other topics. But the most important amendment is your tax rate computation. So please expect a question on this. Clear? Chalo. Other amendments, people, small changes. One is when it comes to domestic company. This is a consistent change which happens. For those who know people in domestic company, your previous year turnover is checked for. Yes, generally we take 2 years before turnover for you to check for a 25%. So automatically now that you're moving to the next assessment year, the previous year also changes. In your book, this would have been previous year 22-23. Now it is 23-24. Very simple. So what are you doing? You're simply telling that if I am writing exam for PY 25-26, I'm going to ignore PY 25-26. I'm going to ignore PY 24-25 and I'm ranking 23-24. So this is my previous year. This is my previous year. I need to take previous year, meaning 2 years before. So from 25-26, take 2 years before, which means 23-24 is what you need to take. And that's what they've confirmed to you. So they're simply coming and saying, if your turnover between 23-24 is up to 400 crores, you can take a tax rate of 25%. Otherwise, tax rate is simply 30%. That is what the statement is. Clear? Yes. Chalo, good. That is the major amendments that you have in your basics of tax, people. Any difficulties on this? Let's we go forward. Chalo, let's go forward. The next amendments is coming in your salaries. A very minute amendment, but definitely important. This makes this topic a little more interesting and equivalent for you to be tested in examinations. We are in the chapter of salaries, the topic called perquisites. Under perquisites, for those who know people, we had something called medical treatment. And under medical treatment, you had two options. Option number 1 said if you want a medical treatment in India, or option number 2 said if you want a medical treatment outside India. Can you help me remember the topics? It was saying that if you have a medical treatment in India, then they will say 4 reasons I will make it exempt for you. 1. You are getting this treatment in employer's own hospital. 2. You are going to get a treatment in government hospital. 3. If it is going to be a treatment for any approved diseases. And 4. If it is going to be any kind of treatment for COVID-19. 4 amendments, 4 rules, people. One is employer's hospital, government hospital, COVID-19 and any approved diseases. For these 4 reasons, if you're getting a treatment in India, then it was fully exempted. Other than that, every treatment was being taxed if it was Indian treatments. Correct, not correct? Next came your foreign treatments. Now foreign treatments had a problem. For those who know people in foreign treatments, used to come and say whatever expenses you will incur there, which means the treatment expenses and stay expenses were exempted if RBI permits it to you. But whatever travel you do from India, that had a problem. The problem was that they used to come and say that if you're going to travel from India, then I will only exempt the travel expenses if your total GTI of the employee is within 2 lakh rupees. Total GTI. Check your books, people. You'll find it. The total GTI was within 2 lakh rupees. Now, obviously, 2 lakh rupees in today's generation, 2026, if you say that someone should have a total income itself of 2 lakh rupees, seems extremely unfair. That too for a person who's going outside India for getting treatment and all. Did not make sense. And therefore, income tax decided this year we'll change the rules. The rule became 8 lakh rupees. So that's the amendment for your current attempt, people. The amendment comes and says, If you are going to have a medical treatment outside India and you're going to travel from India, then your expenses of travel from India will be treated as exempt if your total GTI of the employee is less than or equal to 8 lakh rupees. It's not 2 anymore, it is 8 lakh rupees. That is what the amendment is. Clear with the amendment? Be very careful on this amendment of. Yes. Chalo. Next amendment is on the specified employees. For those who know people, we have a topic called as specified employees. Specified employees used to come and say that if you are an employee who is a little richer from income tax perspective, then in that case, these 4 perquisites which were given to you were treated taxable based on the conditions given. In simple words, they were basically coming and clarifying that if you're not going to be a rich employee, you're not going to be an employee who's categorized as a rich person, then in that case, these 4 were treated as exempt even if it was supposed to be taxable. Yes, that is what the amendment was. So what was the rules are? They said that if you are going to be any of these employees who are going to get motor car, education facility, not the allowance, the facility, any kind of transportation facilities, and any kind of servant gas, electricity and water supplies. In these kind of cases, they used to come and say, I will only tax it for people who are considered as specified employees, meaning you had to be specified for you to tax these items. If you're not specified, you are exempted for this. Now, the problem in the specified was that income tax used to come and say specified matlab director, big shot, no problem, big person, therefore definitely should be taxed, no doubts about it. Yes, then it was an employee who was holding 20% voting power in the company. Definitely looks like an owner of the company, therefore taxing him made sense. Problem come on the bottom. Problem said that last time Variko, if you notice your books, it would say employee whose income from salary exceeds 50,000 rupees. So there was a rule which used to come and say that this number should be 50,000 rupees per annum. Imagine telling an employee that, sir, if your salary is more than 50,000 rupees per annum, you will be taxable for these items. An employee with a salary of 50,000 rupees is like 3,000 rupees for a month. 3,000 rupees you're expecting that employee to have for him to be exempted for servant charges and all. Did not make sense at all. The number was very age old, very old, did not make sense and was redundant in today's regime. To make sure that things become aligned better, this time income tax comes and says the number is now 4 lakh rupees. Which means if your total salary for the year is going to be less than or equal to 4 lakh rupees, then I will exempt the top line items. But if it is not going to be such, then I'm going to be taxing those line items, which means now you should have a salary of more than 4 lakhs to be taxing those items. If your salary is less than 4 lakhs, you will not be taxable for these components. Clear, not clear? Yes, but again, even though I'm reading this amendment, I want you to understand this very carefully. When it comes to these 4 cases, income tax went a little crazy. You already have it in your book itself, but I'm explaining this once again. When it comes to the 4 components we spoke about, the 4 perquisites we spoke about, income tax comes and says, first you have to explain to me, how are you receiving this benefits? How are you receiving this benefits? 1, you are telling, sir, employee is paying for the benefit and employer is reimbursing. What am I talking about? I'm saying what will happen is, let's say for example, for the education facility, for the motor car and all, first I will pay, employee will pay the money and then employer will give back a reimbursement. If that is the scenario which is coming up, then income tax said, don't care, everything is taxable. Everything is taxable. You can't get any exemptions. You call yourself specified, you call yourself non-specified, I don't care, you are always taxable. The change was that income tax used to come and say employer should directly provide this. Employer should directly provide this. So if the question used to come and say that the employer is directly providing it, then I would come and ask the question, tell me, is this employee a specified employee or is this employee a non-specified employee? Correct? If you come and say that you were a specified employee, then I was saying it was taxable. But if you were saying it was non-specified employee, then I was saying it was exempt. Yes, now this rule did not change even in the current regime, which means even now people, despite the fact that they've made it 4 lakh rupees, please note that carefully that this is only applicable if the employer directly provides, which means if the employee is going to pay for the money and get the reimbursement back, even if it is within 4 lakh rupees, you are taxable for these 4 components. Very, very important, a very small minute adjustment which gets tested in examinations. Students get extremely cautious about this. They see the question and they come and say, Rahul, looks like salary is less than 4 lakhs, let's make it exempt. No. You cannot exempt it unless you are aware about the fact that you have to first get it from the employee directly. This benefit itself should have been given by the employee directly and should have not been paid by you. So very, very important, people. This adjustment is what you have to keep in mind extremely carefully. Read the lines carefully. It says the above exemption for non-specified employees is only available in case the services are facilitated by the employer. What do you mean by facilitated? He should have directly given it to you. In case the services are availed by employee and reimbursed by the employer. If the services are going to be availed by employee and reimbursed by the employer, then this is a red flag. Then in this case, the sum reimbursed will be treated as a perquisite whether or not he is a specified employee, which means I should not get a reimbursement. If I'm getting a reimbursement, I don't even look at these conditions. It is always taxable. It is always taxable. Clear enough with me? Be very, very careful on this amendment of. Clear? Yes, so current year amendment, people, basically comes and says 4 lakh rupees is the amendment for you to keep in mind. Very simple, straightforward. Chalo. Let's move on forward. The next amendments which you have, people, is the amendment coming in chapter 6, which is your PGBP topic. Now, there is no significant amendment which is there, but there is a small amendment when it comes to the definition of MSME. For those who know, people, we have a provision in income tax section 43B, and 43B basically comes and says that if you are going to be getting any payment done to micro and small enterprise, then you need to make sure that the payment is happening to them within 45 days in case of written agreement or 15 days in case of oral agreement. You remember the provision? Yes. Now, the current year basically has a small change on how the limits are. So now they have defined what is micro and small enterprises or the limits, and the limits is given on the screen. The limits basically say what you need to do is you need to first call yourself whether you are a micro or a small enterprise, and I will check for your investment in plant and machinery, which means I'm checking for your asset worth. At the same time, also checking for your turnover worth. So income tax now comes and says, MSME, sorry, not income tax, MSME Act comes and says, if you're a micro enterprise, then your investment should be within 2.5 crores of plant and machinery and within 10 crores of turnover. What? Within 2.5 crores of plant and machinery and within 10 crores of turnover. If you're going to be a small enterprise, number is simply 10x. Number is simply 10x. Matlab, what is happening? 2.5 crores will become 25 crores, 10 crores will become 100 crores. Simple, straightforward. So what is the rule, people? The rule basically comes and says if you're going to have any payment made to micro and small enterprise with an investment of 2.5 crores in plant and machinery and 10 crores in turnover, or 25 crores in plant and machinery and 100 crores in turnover, those kind of employees we are going to take as micro, those kind of entities we are going to take as micro and small enterprise, and to these entities you need to ensure that you make the payments within the 45 days of oral agreement, 15 days of written agreement. Yes or no? Yes. Now, can I make your life simpler, people? If you think about it, I said micro and small enterprise, which means logically speaking, whether you call yourself micro or not, it doesn't matter. Can I simply come and say, if your investment is less than 25 crores and less than 100 crores, you are anyway going to sit in one of the two. You're either going to be sitting in small enterprise or you're going to sit in micro enterprise. So how does it matter? Do you have to remember both micro and small enterprise as a definition? Answer is no. If you think about it, I can simply come and tell you for your examination, remember the fact that if you are going to have an investment up to 2.25 crores and a turnover up to 100 crores, then in that case, you are going to be an entity which is covered. Simple, straightforward. Correct? Yes, because the moment you say you're less than 25 crores, you're either going to sit in small enterprise or you're going to sit in micro enterprise. Either of the two is fine for you. Both of them are going to be disallowed. So how does it matter? Yes, so very simple thought for you to keep in mind is that if the question comes and says that you are going to be given investment and turnover, check for the investment to be less than 25 crores and turnover to be less than 100 crores. If that is the case, then you come and say they are one of the two enterprises, either they are micro or small, and therefore their payment should have been made on time. Illana, they will be disallowed. Simple, straightforward. Chalo, perfect. The next one is in capital gains, people. Now, this is not an amendment for you. This is more of a clarificatory thing because, again, it is going to be tested at CA final syllabus, not at CA inter syllabus. But what they've done is, in capital asset definition, we had something called FIIs. We used to come and say that if you are having a security from FIIs, then it was treated as a capital asset. This year's amendment simply comes and clarifies that when you talk about FIIs, we also have now an additional component called as investment funds. Yes. Now, what is investment funds? Is called AIF. This AIF is basically part of CA final syllabus. So, you're not going to be tested this at all. This is completely for your CA final discussion, not relevant at all for you at inter syllabus. Do not worry about it. Yes. So, income tax is simply coming and saying any securities held by AIFs are also going to be considered as capital assets, will not be part of PGBP definition anymore. That is what the clarification is. Clear? Yes, chalo. Now, one other clarification which I don't have to give, but I'm just probably showing it to you, is that when it comes to capital gains, you know, until last year you had this burden on yourself to figure out that the asset is sold before 23rd July or after 23rd July. Capital gains now, you are in 25-26, which means all transfers happening in the current year are obviously going to be after 23rd July. And if that is the case, you don't need to mug up the old laws, which means there is only one rule for you. The simplest rule, that if you're going to go for 1-1 money, we just discussed it here. If you're going to go for 1-1 money, the tax rate is now going to be 20%. 1-1-2 tax rate is going to be 12.5%, and 1-1-2A tax rate is going to be 12.5, exceeding 1,25,000. Yes, the rules now have become simpler for you. You don't have to read the old rules itself. You can remember, you can forget them off. If you have it in your book. Yes. Chalo, perfect. Chalo. With that, people, I think capital gains is done. The only major amendment after this is your TDS, the painful process which has happened in the current year. This year makes TDS extremely important for you. So you will have to pay a little bit of an attention on your TDS topics because you're having healthy amendments in your TDS and you will get a question on that. Yes, so all the three attempts are going to be extremely critical for you to keep in mind. In all the three attempts of May, September, Jan, CMA June and December, you are going to get healthy amendments on your TDS topic. So let's pay attention to that. What are the amendments, people? Is that first, when it comes to amendments in TDS chapter, they've come and clarified that if you're going to have any kind of dividends paid by a company to the shareholders, in that case, shareholder will now not be liable for TDS if they receive it up to 10,000 rupees. Yes, earlier it was 5,000, now it is 10,000 rupees. So they're saying dividends led, the threshold limit has been jumped to 10,000 rupees for both mutual funds and for shares, no matter what it is. So simple, straightforward amendment. What is amendment, people? You should not get dividend more than 10,000 rupees in order to be liable for TDS. If you're going to get a dividend more than 10,000 rupees, you're going to be liable for TDS in either shares or in either mutual funds. Yes, good. Amendment number 2. Amendment number 2 is that when you went to section 193 used to come and say that if you are having any interest of securities, then there was no threshold limit defined. Individual securities had threshold limits. Now they have confirmed that for each security, the threshold limit is 10,000 rupees. For each threshold limit, it is now 10,000 rupees. So now you will not deduct TDS under 193 if the threshold does not cross 10,000 rupees per annum. Per annum, that is what the rule is. Clear? Yes, next is coming to 194A, people. For those who know, 194A was about interest on deposits. So if you had 194A interest on deposits, there was a threshold limit of 40,000 and 50,000. Now the limits have been changed. They say if you're a normal citizen, then I will not deduct TDS for you from banking sector up to 50,000 rupees of interest. If you're a senior citizen, number is 1 lakh rupees. Yes, so now the limit comes and says interest on deposits received by any kind of individuals or HFs or whoever the party is from a bank for time deposits, FDs, RDs and all. Now you will not be liable for TDS up to 50,000 rupees of interest and 1 lakh rupees worth of interest on senior citizenship. If you are getting interest from another place like company deposits and all, the company deposits which you have, no, there it was 5,000 rupees. Now the number is 10,000 rupees. Now the number is 10,000 rupees. That is what the amendment is. Clear? Yes. Chalo. Next, people, is when it comes to 194B and BB, which was your casual income. The casual income used to come and say that if you're going to get any winnings from lottery or horse races, then in that case you are liable for 30% of the winnings for a number more than 10,000 rupees per annum. Per annum. Now, this year they came and said, Rahul, I don't understand. How can you be tracking per annum and everything? It's very difficult. At the same time, who is so lucky in life that a person will have 10,000 rupees lottery coming from the same person more than once? Doesn't make sense. And therefore, this year amendment comes and clarifies that you will now be liable for TDS only on 10,000 per transaction. Which means I'm not going to be making you liable for 10,000 rupees per annum. It is now 10,000 per transaction. That is what the amendment is. Simple, straightforward. Which means if Rahul is coming to you and is winning lottery from you, for this lottery, if I receive more than 10,000, TDS will come. For the next lottery, if I don't receive more than 10,000, no TDS will come. That is what the amendment is. Yes. Good. Next comes your commissions part, people. There are three kinds of commissions which you have. One is called your insurance commission, one is called your lottery commission, and third is called your normal commission. In all those cases, income tax now has made everything standard. Income tax says the TDS rate is now 2% for all the cases with a threshold limit of 20,000 per annum for all the cases. Yes, so earlier it was 15,000, now it has been changed to 20,000 rupees. So up to 20,000 rupees, you will not be liable for TDS. Even if you're liable for TDS, the rate is no more 5, the rate is now 2%. That is what the amendments are. Clear? Yes, good. Next is your amendment in 194I, people. For those who remember, until last year, when you had rentals, if you get TDS on rent, the TDS threshold was 2,40,000 for the whole year. And therefore, income tax law used to come and say, even if you have not occupied the property for some months, it was completely fine. As long as my overall TDS goes more than 2,40,000, they were expecting me to pay TDS. Now, they've clarified this to you. They've said that I will only be collecting TDS from you in the same conditions as what 194IB works. What did 194IB used to come and say, people? They were only collecting TDS from you if the monthly rent was more than 50,000 rupees. Here they have made the same amendment. So now they come and clarify, even for the normal rentals, not for the 194IB, but even for normal rentals, if you are going to have an amount more than 50,000 rupees per month, then only you will be liable for TDS. Otherwise, you're not liable for TDS. So you don't need to worry about an annual payment now. You only need to worry about the individual monthly payment right now. Clear? Very good. Next came your 194J, the most important section for all of you and me. The section basically talks about professional payments. Until last year, they used to come and say, I will deduct TDS at the rate of 2% or 10% for a threshold limit of 30,000 rupees. This year, the threshold limit has been changed. The threshold limit is now no more 30,000. The threshold limit is now 50,000 rupees. So now I will not be deducting TDS up to 50,000 rupees on each nature of payment. I will only be deducting TDS after 50,000 rupees worth of payments which are received to you. Yes, good. Next one was basically your 194LA, which was talking about your compulsory acquisition. Compulsory acquisition last year threshold limit was 2.5 lakhs in your book. Now you can remove the 2 and a point. You now have a threshold limit of 5 lakh rupees. Yes, which means income tax says for compulsory acquisition, I will no more deduct TDS up to 5 lakh rupees. Clear? Last and the most important is your amendment of the current year, something which was introduced in Finance Act 2024 but was notified only from the current year of yours. So you are expecting a question on this. This basically comes and says that if you're going to have any kind of payments which is happening between a partner and a partnership firm, payments which are not liable for TDS as partner and partnership firm will now be liable for payments which are not exempt from partner to partnership firm will now be liable for a TDS at the rate of 194T, 10% threshold limit of 20,000 rupees. So notice it says any kind of salary, remuneration, commission, bonus, interest which is paid by the firm to the partners will now be liable for TDS at the rate of 10% with the threshold limit of 20,000 per annum. With a threshold of 20,000 per annum. Very, very careful to be kept in mind that share of profit is not covered. That share of profit is not covered. Why, Rahul, it is not covered? Because you and I both know any kind of profit sharing from a partner to from a firm to a partner is always exempt from tax. So be very careful that they have not covered share of profit because that was anyway exempt from tax. I'm only covering the taxable components, the components of salary and interest which is covered under 40B. Those payments will now be liable for TDS at the rate of 10% with a threshold limit of 20,000 rupees. Clear? Yes, chalo. That moves me to TCS, people. TCS has some critical amendments to be kept in mind. First amendment is on your hazardous goods, where income tax comes and says until last year there was something called timber pay 2.5 that has now been reduced down to 2%. So now income tax says if you are going to have any kind of purchase of timber, you need to additionally pay 2% for TCS. Coming to the next one, which is your forest produce, income tax now comes and amends saying that forest produce will be liable for a 2% TDS only when it is taken under a forest lease, which means I need to have an approval for this. I should have got an approval to go and buy, to go and sever forest produces, and only then I'll be liable for TCS. If it was not through a forest produce, it is not liable for TCS. It more looks like an illegal purchase, and therefore that will not be covered there. Yes, so these two amendments have come into mind. Timber 2%, forest produce under forest lease 2% is what the TCS amendment is. Correct? Very good. Apart from this comes a very serious amendment, people, which is your luxury products. Until last year, you will know that TCS used to come and say that if I purchase a motor vehicle, then motor vehicle alone was liable for a TCS at the rate of 2% for a value exceeding 10 lakh rupees. Now, income tax says I am also notifying other luxurious products. So now they have notified some more luxurious products where they have come and told, my dear rich people, If you are going to buy such luxurious products, then I need TCS on that also. No more motor vehicles alone. I will need TCS on that also. Those are the items given to you. Notice items say wristwatch. So income tax says if you are going to take a wristwatch of a value exceeding 10 lakh rupees, which means one watch you should have purchased for more than 10 lakh rupees. One watch you should have purchased for more than 10 lakh rupees. You need to pay additional TCS at the rate of 1%. Next, any kind of art pieces, antiques, paintings, sculptures to be liable for 1% for a value exceeding 10%. Third, collectibles like coin and stamp liable for 1%. Yacht, boat, canoe, helicopters, any kind of luxury things we have, things which you want to for farmhouse and all we take and go. So all those things 1%. Pair of sunglasses, one sunglass you're going to buy for 10 lakh rupees liable for 1%. Going to buy handbags and purses like Zara, all those Chanel and all those stuff you're going to buy for more than 10 lakh rupees, 1%. Pair of shoes, if you're going to buy shoes, Nike, Prada and all those things you're going to buy for Prada I think is not a shoe brand, but okay, whatever. The shoes you're going to buy for more than 10 lakh rupees, you're going to liable for 1%. Sportswear and equipments, if you're interested into golf kits, ski wears and all those things for more than 10 lakh rupees. If you're going to have any home theater system, buying yourself a home theater system for a price of more than 10 lakh rupees, liable for 1%. And finally, horse for race clubs and polos. If you're going to buy horses for the purpose of your luxury events like race clubs and polos, then in that case those horses payments is also going to be liable for 1%. Basically a move to make sure that all my rich people who are spending way too much money on single products now need to pay more than 1% TCS. Yes, chalo. The next thing is the more important one, people, which is your overseas transaction. Do expect this question as a part of your question number 2B. This is going to be your LRS payments. For those who remember, people, when it comes to overseas transaction, until last year they used to come and say that up to 7 lakh rupees you were not liable for TCS. Now the limit has been enhanced. The limit now comes and says up to 10 lakh rupees you will not be liable for TCS. After 10 lakh rupees you will be liable for TCS. So income tax now comes and says up to 10 lakh rupees no liability of TCS. After 10 lakh rupees you will become liable for TCS at the rate of 5% for your medical and educational purposes, at the rate of 20% on all other payments. Similarly, for overseas transaction until last year, up to 7 lakhs we were liable for 5%. After 7 lakhs it was 20%. Now they're saying up to 10 lakhs it is 5%. After 10 lakhs it is 20%. That is what they come and clarify to you. But here's the most important amendment. Until last year, your book will come and clarify to you that if you have paid for education purposes outside India by taking an educational loan, if you take an educational loan for the purpose of making a foreign payment of education, then they still had a TCS of 0.5%. This year, they have come and clarified that if you are going to take any education loan for it, then you already don't have money to pay for the education. Idla, if I'm asking you to pay extra TCS, it sounds extremely unfair from my side, and therefore income tax says if you are going to take any educational loan for the purpose of pursuing education, then this is not going to be liable for TCS. You can ignore this off. You can ignore this off. We will completely exempt you from making liability of TCS. That is what the amendment is. Yes. So help me out, people. What is the amendment? If I'm going for overseas transaction, what will we do? For the first 10 lakhs, I'll charge 5%. After 10 lakhs, I'll charge 20%. Other than overseas transaction, if I'm going to go for any kind of foreign payments, for the first 10 lakhs, no TCS. For any educational loan, no TCS. Other than educational loan, normal education, 5%. Medical association 5%, any other payment will be 20%, and that is what the LRS payment looks like. Clear? Yes, just to clarify this a little better, let me give you a small example. Let's see if you understand the example. Example is if I come and say there is a person who's going to start making LRS payments. The LRS payments are like this. On 1st, let's say April 2025, he has made a payment of, let's say, gift to his sister. He has made a payment of gift to his sister of rupees 5 lakhs. Yes. Next, I'm going to say on 1st June 2025, he's decided to go for a Bombay, not Bombay, Bombay will be, let's say Bangkok trip. I want to go for luxury. Yes, he plans to go for a Bangkok trip of, let's say, rupees 8 lakhs. Then I'm coming and saying on 1st August 25, this person has made education payment. The person has made an education payment of rupees 15 lakhs. How has he made the education payment? A loan has been taken for rupees 5 lakhs and another balance is coming from self money. Balance is coming from self money of rupees 10 lakhs. Then I'm coming and saying on 10th September 2025, he has made a payment, another gift to his sister. He's made another gift payment to his sister of rupees 7 lakhs. And finally, on 11th January 2026, he has made a payment for medical expenses of rupees 5 lakhs. If this is the background, people, you need to tell me how TCS will happen. Pause the video, try to solve it yourself, see if you get the answer. Then I will give you my solution. Yes, chalo. Step number one, always split your payments into normal payments and overseas payment. If you notice, overseas works differently and normal works differently. So I'm going to split my payments into normal and overseas first. Gift to sister is going to be triggered as a normal payment. Bangkok trip is an overseas payment. Education payment is normal payment. Gift to sister is normal payment. Medical expenses is normal payment. Step number one. Step number two, I will come and say, how do I take each item? Let's first tackle the overseas payment. In the overseas payment, help me out people, what does it say? For the 10 lakh rupees, I'll be liable for 5%. After that, it is 20%. Now, Rahul itself has made a payment only of 8 lakh rupees. In this case, I will say this full 8 lakh rupees is going to be liable for 5% answer. Clear? Yes. Now coming to the normal payments. In the normal payments, I will go stepwise, and in that stepwise, I will start eliminating items up to 10 lakh rupees. So for the first 5 lakh, I will eliminate this off and I will say sits within the 10 lakh rupees, therefore no TCS. Coming to education payment loan. Education payment loan, we just confirm people, this year's amendment comes and says no TCS. The moment you're sending money through a loan, it is not liable for TCS. Next, coming to the self payment, here is where the challenge starts. Notice, I have to exempt up to 10 lakhs. I have already exempted 5 lakh rupees here. The moment I exempted 5 lakh rupees here, from here, I will have to exempt only 5 lakh rupees. And therefore, I cannot take this full thing as exemption. So what will I do? I will now come and say, in this 5 lakh, 10 lakh rupees, I'm going to split them into two buckets. In this 5 lakh rupees, I'm going to split them into two buckets. One bucket is going to be another 5 lakh rupees. This 5 lakh rupees to cover my above limit will be liable for 0%. Yes, so 5 from the top, 5 from here becomes 10 lakhs. After this, my payments are now exceeding 10 lakh rupees. I can now start levying my normal TCS. Look, education is going to show 5%. So my payment is going to show 5% here. Payment is going to show 5% here. Clear enough? Yes, move forward. Now, when it comes to gift to sister, again, this payment has already crossed 10 lakhs. My 10 lakhs bucket is got over. One here and one here. This bucket is already gone and therefore I don't have any more bucket left. So therefore now every other payment will be asked for reasons. Reason is what? Medical, education, other reasons. Gift to sister becomes other reason. This becomes liable for 20%. Coming to the medical one is also after 10 lakh rupees and therefore this will be liable for 5% and this is what your answer statement will look like. This is what your answer statement will look like. Any difficulties on this part? Yes. Now just to make it another example, what if I change this to 18 lakhs? If I'm going to change this to 18 lakhs, then what am I going to do? I'm going to simply come and say, in my overseas payment, I am eligible to make payment up to 10 lakh rupees for 5%. So split that now. 10 lakh rupees will be liable for 5%. The balance 8 lakh rupees will be liable for 20%. That is what the statement will show. Simple, straightforward. Clear? Yes. So be very, very careful on this amendment, people. This amendment is going to be tested for a 4-mark in examination. Yes. Chalo. That leaves me with the last two people. One I'm taking you back is on chapter 6A. A very, very small amendment in your chapter 6A. Nothing important, but I'm just clarifying this to you. The small amendment in chapter 6A comes and says, if you're going to go for NPS scheme, there were two things. NPS scheme, they used to come and say, in NPS scheme, one, you can self-contribute for yourself, and second, employer can contribute on your behalf. Yes. Now, when it comes to self-contribution, income tax used to come and say, for the first 50,000, there'll be no restriction whatsoever. For the first 50,000, I can take the full deduction as it is. For the balance alone, I'll have to check for 10% or 20% ka condition. Now, this year's amendment comes and clarifies, when you're contributing for yourself, you don't just need to contribute for yourself, you can now also contribute for your minor and get an exemption. Yes, so current year amendment is simply come in clarifying, a person is eligible to now contribute for self as well as his minor child. So if you're going to contribute for a minor child, that also will be eligible for a deduction of 50,000 rupees. Accumulated deduction of 50,000 rupees can be claimed for yourself and your minor. That is what the amendment is. A very simple small amendment, people. If it comes also will not carry much weightage. You can easily figure it out. The moment you see self contribution, simply say 50,000 rupees can be claimed as deduction. Clear? Yes, very good. This leaves me with the last amendment for you. The last amendment is on your updated return. An expected question when it comes to your question number 4B. Yes, so question number 4B amendment for you. What does it say? If you remember in your provisions, people, you would have learned that there was something called an updated return concept. What did updated return come and say? Updated return used to come and say that if you are going to file a return, let's say for example, I am in assessment year 26-27. So for an assessment year 26-27, my previous year is going to be what? My previous year is going to be 31st March 2026. For this 31st March 2026, my due date of filing return was either 31st July or 31st October as per inter syllabus. Hey, correct idea. Yes. So now income tax is coming and saying 31st July, you are now eligible, or 31st August, you are now eligible. After this, if you did not file your return also, I still used to give you some time. There was a time until 31st December 2026 to file what we call as belated return. Correct? Yes. So which means you still had some time. I did not have a problem with you. You were still eligible to file your return. But then what happened is, imagine if you were not able to file a return even now, and there are some underreporting of income. You know that you have made a mistake in the return filing, because of which you should have paid more tax. Income tax used to give you an option called as updated return. Updated return come and says that after 31st December 2026, you are eligible for another 2 years from the end of the financial year. Which means, first I will take a financial year end, which is 31st March 27. From this 31st March 27, I was eligible to file an updated return for another 2 years, which means 31st March 28 and 31st March 29. This was what my conditions were. Any doubts on this part? Yes. So this complete period was called as my updated return period. This period is when you could have filed your updated return. Now the problem which used to happen, people, is that if you're filing updated return in this period, you had to pay some additional taxes. How much additional taxes you used to pay? If you're filing an updated return between the period 31st December 26 to 31st March 28, then you were liable to pay an additional 25%. You were liable to pay an additional 25%. If you are filing it anywhere between 31st March 28 to 31st March 29, you are liable to pay an additional 50%. This is what you have learned. This is what you remember. Correcta, Ilya? Yes or no? What was the rule, people? Updated return. After the end of the assessment year, you could file it up to 2 more years for you to get an updated return, where you can pay more taxes to government by adding an extra 25% or adding an extra 50%. This year, Nirmala Sitharaman ma'am comes and says the updated return scheme which I launched was a big success. I'm seeing so many people now filing updated return and voluntarily disclosing their incomes. So I want to give them more time and opportunity. With that more time and opportunity, added an additional 2 years, which means now Nirmala ma'am says you don't need to file an updated return for only 2 years. You can file it for 4 years, which means now I'm giving you time 31st March 30 and 31st March 31 also. So now 4 years time is being added to you for you to file your updated return. But obviously, people, if for 2 years itself you were asking 50%, I need extra money here. So income tax says if you're filing the return between the 3rd year, then you have to pay an additional tax of 60%. And if you're filing an updated return in 4th year, you need to pay an additional tax of 70%, which means normal tax, if you had 1 lakh rupee, in the first year you would have paid 1 lakh 25, in the second year you would have paid 1 lakh 50, in the third year you will pay 1 lakh 60, and fourth year you will pay 1 lakh 70,000 rupees in order to file your updated return. That is the amendment for you. So the amendment now is that now you can file updated return for an additional period of 2 years. Yes, so basically now it is no more 2 years from the end of the assessment year, it is 4 years from the end of the assessment year. That is what the provision says. Shall we read? Read. It says where the updated return for filing revised return or where the due date for filing the revised return or updated return has been lapsed, then the person may at his option file something called as an updated return for a period of 48 months from the end of the relevant assessment year, which means 4 years I can file my updated return. If you are going to file an updated return in the first year, then it is 25%. Second year it is 50 percentage, third year now says 60 percentage, and fourth year now says 70 percentage you have to pay additional tax. Yes, if you're ready to pay that much, then yes, you can file an updated return. Now, during filing of updated return, there is one thing which has been clarified to you. If you know, people, we have discussed about it in class, that when you file an updated return, there is a condition that you can only file an updated return when you are voluntarily ready to do it. Which means tomorrow, imagine if you get a notice of assessment, if you get a scrutiny picked up, if you're picked up for penalties and all those things, I will not let you file an updated return. To add that flavor, income tax has now come and said, if at any point of time a reassessment notice is issued on you. Now, what is reassessment notice? Is CA final syllabus, not for you, but just to clarify, if any assessment notice in the form of reassessment has been issued on you, then that is also a reason for which you cannot file an updated return. I will not permit you to file an updated return if a reassessment notice is issued to you and is pending on this date. If it is not pending, it is disposed of, then different conversation. But as long as assessment is going on, no permission for you to file an updated return. That period will not be taken into consideration. Yes, so it says an updated return cannot be filed when the notice has been issued after 36 months from the end of the relevant previous year, relevant assessment year. However, if the notice has been disbarred of, if they say that it is not a fit case to issue notice, which means they don't want to proceed with the assessment, then you can file an updated return, and that is what the concept is. Clear? Chalo. The last one is not something significant, people. I don't think I need to teach you this also. Just normal thing, every year it happens, and therefore this year also it happened, is that when you have an Aadhaar and PAN, you need to generally link it. These due dates have been extending for lifelong, and it continues to extend. This year they've come and clarified that now you can update your Aadhaar and you can link your Aadhaar with PAN number up to 30th September 25. So up to 30th September 25, you are now eligible to link your Aadhaar with PAN. Until such date, I will not have any implications. But even after 30th September 25, you don't link your Aadhaar with PAN, then you have consequences, the theory topic question that we have for our syllabus. So that is what this amendment comes and clarifies to you. Yes? Good. This is all the amendments that you have for your syllabus, people. 55 minutes done. 5 minutes. I'm going to quickly summarize the whole amendments for you. Can we do it together? Chalo, let's do it together. First amendment, people, that we come and clarified for your exam, it is assessment year 26-27. Second amendment is on your tax rates, where we discuss that if you're going under default tax regime, then you'll have a tax rate of exceeding 4 lakh rupees by 5%. So 0 to 4 lakhs is 0, 4 lakhs to 8 lakhs is 5%, 8 lakh to 12 lakh is 10%, 12 lakh to 16 lakh is 15%, 16 lakh to 20 lakh is 20%, 20 lakh to 24 lakh is 25%, after 24 lakh is 30%. Simple shortcut. For the first 24 lakhs, you will be liable for 3 lakh rupees. Then, if you are going to be a poor person under default tax regime, that will be because your total income is up to 12 lakh rupees. So, if your total income is up to 12 lakh rupees, you will be given a rebate of 60,000 rupees. But note, current year says you cannot claim any rebate on special incomes under new tax regime. In the new tax regime, you can only claim rebate on normal incomes. That is what the amendment is. Next, if you want to go for marginal rebate is now on 12 lakh rupees. So, therefore, you can go up to 12 lakh 60,000 rupees. Next, if you're going to go under salaries, people, salaries now come and say, if you're going to have any kind of medical treatment outside India, then if you're traveling from India to outside India, then the money which is given by your employer will be exempt if your salary, if your gross total income is within 8 lakh rupees. Third, if you're going to have any kind of specified employees, any perquisites given to specified employees in the form of motor car, servant, water, electricity charges, any kind of education facilities and all, we will ask a simple question. Is it given because of a reimbursement? In that case, taxable for everyone. If it is not given as reimbursement, but rather given as a direct benefit by employer, I will split you into two buckets: specified, non-specified. Non-specified, exempt. Specified, I will come and ask you, are you having a salary this year more than 4 lakh rupees? If your income from salary excluding perquisites is more than 4 lakh rupees, I will take you taxable for that component. Otherwise, I will not take you taxable for that component. Next, came in your PGBP, where PGBP like come and says, if you want to specify that you're a micro and a small enterprise, your investment in plant and machinery should be less than 25 lakhs and your investment and your turnover in the current year should be less than 100 crores. Less than 25 lakhs and less than 100 crores is what the, less than 25 crores and less than 100 crores is what the condition is. I'm so sorry. Less than 25 crores and less than 100 crores is what the condition is. If that is the case, then you should make sure that all the payments you're making to such enterprise should be within 45 days of oral written agreement and 15 days of oral agreement. Illana, this payment will be disallowed and allowed in the year of actual payments of capital gains. Less simple, you have to keep in mind that when it comes to 112, the rate is 12.5, 112A rate is 12.5, exceeding 1,25,000. 111A is going to be 20%. The rates have been simplified. No more 23rd July conditions and all. One rate standard for your examinations. Then comes your provision commissions of TDS, where TDS, like Aman says, dividends is going to be 10,000 rupees. Any kind of interest on securities is 10,000 rupees. I am not going to deduct TDS on 194A fixed deposits and RD. If you are having an interest less than 50,000 rupees, senior citizen 1 lakh rupee, company deposit 5,000 rupees. Winning slate is 10,000 rupees per transaction. All commissions will be 2% and threshold limit of 20,000 rupees. Your professional fees is going to be at the rate of professional fees limit is now exceeded to 50,000 rupees. Your rental payments will now have a 50,000 per month ka threshold limit. Your compensation for compulsory acquisition will be 5 lakh rupees. Amendment of current year comes and clarifies that if you are going to make any salary and interest payment to your partners from a partnership firm, you need to deduct TDS at the rate of 10% with a threshold limit of 20,000 rupees. TCS rules have now come and clarified that when it comes to timber, TCS rate has become 2%. Forest produce taken for forest lease will be 2%. Any luxurious products that you're going to buy this year for a price exceeding 10 lakh rupees, wristwatch, any kind of skiing, any kind of sunglasses, shoes, home theater system, horses for polo racing, any kind of person who's going to buy bags, all those kind of luxurious products that you can think of should not be paid for more than 10 lakh rupees. If you are, then you're going to have a TCS at the rate of 1% on that. LRS scheme now comes and clarifies that you will not have an overseas transaction TCS up to 10 lakh rupees, and if it's an overseas tour package, then it is 10 lakh rupees tak 5%. Second, if you're going to send any money outside India for education purpose through education loan, then there'll be no liability of TCS on that. Next is your NPS scheme, where NPS comes and clarifies when you're doing self-contribution, you can also do contribution for your minor child. Last amendment is on your return filing, which says if you have any updated returns to be filed, you can now file an updated return up to 4 years, where in the third year you will now have to pay 60% and fourth year you'll have to pay 70%. Aadhaar and PAN linking has been updated to 30th September 2025. Yes. This is all the amendments that are there, people. Not much for your syllabus. Thankfully, not many amendments are there, and therefore you should be able to manage it no matter what. Yes. So if you're worried that Rahul, the syllabus has changed, the amendment has changed, the act has come in new, therefore do I have to start over classes again? No. Do not get swayed away by any faculty telling you that you have to do the classes once again. What you have done is already good enough. Please continue with the same. Yes, maybe changing of book would be a recommended suggestion from my side, but beyond that, going through a class once again is definitely not recommended. Not even worth fast track. No. Fast tracks also is only recommended to you for a simple reason: if you're not clear on your concepts. If you're saying that you don't have a clarity on the concepts, yes. But beyond that, don't redo things once again, people. If you need any support on workout, if you want to understand how the sums should be solved, what kind of questions are being come, we're already on the YouTube posting out something called as an assignment series. The assignment series is now going on in a bank, people. We've already sent across 5 videos for you. The next 3 set of videos are also coming in. By this month end, you'll have good questions on every chapter. 11 questions coming in from 11 paper questions coming in for your syllabus. Good practice already. You should be able to do it with that itself. Just scroll off and you'll find it in the playlist, a playlist for your assignment series. You should be able to manage it from there itself. So please do not waste time on direct tax more than what is required. You have other subjects as well, so pay equal attention to every subject and give good amount of time and efforts in every subject, because every subject is going to carry marks. One promise from my side: there is no much amendments in direct tax, so feel free, chill out, do it better. Yes, good. That is all the video from my side, people. Thank you so much for listening to me. I will come back with the next set of videos for you to enhance your preparations for your examinations. But until such time, watch out for the assignment series. Do a good job on that. Spend time enough for other subjects, including direct tax, and make sure that May 26 and June 26 is your last attempt for your intermediate qualification. Yes, chalo. Thank you, people. Have a great day. Bye bye.